Hi, welcome to Boring Money, Rich Life. I'm your host, Joy Hicks. As you guys know, I am constantly trying to up my financial education. So this week I read a book and it's called The Holistic Wealth Strategy by Dave Wolcott. I definitely wanted to talk to you guys about this book because I feel like this is actually a book that is worth reading. I feel like a lot of times when you have these financial books, they don't actually give you like practical tips. They don't tell you how they made their wealth. It's more like a motivational speech, kind of. I actually rented this just from the library, and I will say, if you are trying to expand your financial IQ, honestly, just go to the library because you really probably don't know where to start. And libraries, they tend to pull in books that are pretty well known or good reads. It's not super long, but I would definitely say it's worth a read. The one thing that I did find interesting about this book, the author, he's not a big fan of investing in the stock market. He talks about how his father-in-law was actually wanting to give a gift, I guess you could say, to his wife, which is the father-in-law's daughter, of course. And so the father-in-law, he invested money into the Kodak stock thinking this is probably the best way that I can leave my daughter something like an inheritance. So he was really proud to be able to give her some shares in that stock. And the author talks about how in 2012, Kodak actually went bankrupt. I guess that was kind of when he himself was like, investing in the stock market is not the best way for him to build his wealth. Now, mind you, this is a story. This does not mean that that applies to you. This is just kind of where he started to think about becoming more financially secure and starting to build his life and his assets. He also talks about how he personally doesn't really like financial advisors. Now, I am not a financial advisor, so I recommend that you guys, do your own research and seek out financial help from an advisor if you need to. But the author, he personally doesn't recommend financial advisors because he says, in his opinion, they don't really care to see your wealth grow outside of the products that they sell. So, for instance, if they wanted to sell you like a certain insurance policy where they would get a commission or something like that, then they're not going to really provide other alternative ways for you to grow your money. And so that was kind of why he personally doesn't advocate for them because they tend to have specific products where they get paid by commission and that's all that they kind of offer you. So he was saying he was definitely looking for bigger returns and things like that. So he wanted to find other investing opportunities outside of just like the stock market and outside of getting counsel from a financial advisor. He definitely talks about being in control of your money. So he was saying nobody else is going to care more than you about your money. And you have to start getting very serious about your financial education. You have to get very serious about learning what tools are out there because, again, this is your money. So you're going to be the main person who has that more of a vested interest in making sure that you are successful. Another thing that I did think was kind of interesting was the fact that he said he doesn't really believe in investing in like single family homes. And I feel like when people talk about real estate investing, that's pretty much the main strategy that most people use. Like you go out, you try to buy a home that's maybe in like a bad condition, so that way you can buy it, below retail price. And then you go in, you do the renovations, so that way you can rent it out for more than what you got it and you make a profit. So he was pretty much saying that he does not feel like that is a viable strategy just because you have to think about there's going to be times where you don't have a renter. So you're going to have months where you're not getting rent, you're not getting paid, and you're still responsible for the mortgage. You have to think about there's going to be a lot of times where you need to repair things. We all know roofs need to be repaired, appliances go out, all these different things. So he was saying for him, it's just not really worth it. I know a lot of people make a lot of money by doing single family home investing, but For him, he was just saying that there are better strategies that he feels that you can utilize. The strategy that he actually does believe in is real estate syndication. So, if you've ever seen, and I'm sure you have, because I feel like right now real estate development is kind of booming. But if you ever see these big apartment complexes and you wonder, like, who has all the money to build all these new apartments? It's a pool of people or a pool of investors who kind of put their money together. They'll also utilize debt. So that way they can go in and either build these apartment complexes, or they might find one that's maybe a little bit run down, and then they'll buy it, renovate it, do forced appreciation on it so that way they can profit. So he was really saying that, in his opinion, that is going to be a lot more stable. We all know investing is a risk no matter what you do, but he was saying that those types of investment deals tend to do a lot better than the stock market, because with the stock market, you have to think there are times where, of course, things in the economy are going to have a play on the stock market. We see that today, right? So he feels like real estate syndication is a lot more stable. He would rather kind of partner with all of these other investors who are doing these multi-million-dollar real estate deals because it's a better return. So I'll kind of break it down a little bit more. Like I said, I do think this is worth the read because I'm just going to give you a quick overview. There is so much in this book, like so many things that I was taking notes on, because I would say this is definitely not something that a standard person can do. There's definitely some steps to be able to invest on that type of level, but I think it's still worth us talking about. So before he really dives into what real estate syndication is and alternative investing strategies, he definitely talks about mindset, which is important. So he was saying that there are three wealth disruptors, and that pretty much means there's three things that really work against you when you are trying to generate wealth. So the first one he said is taxes. The reason why is because an employee is always going to get taxed at the highest rate because there is literally really nothing for them to write off. There's really no tax advantage to being an employee. When you look at people who own businesses or people who are investors, they know exactly how much they're going to pay in taxes well before tax season happens because they kind of structure their business around these tax codes. And what he was saying is that the tax code is not necessarily something to fear. It's actually something that you can use as a guide because the government is pretty much telling us, hey, if you do this, you'll get a tax write-off. If you do this, you'll get a tax write-off. So he was saying if you're simply an employee and all you're getting is a W-2, you're not able to leverage any of those incentives that the government gives you so that way you can save your money. So it's tax season right now, right? And think about the person who really pays the most. That's going to be a single working person, right? Because they don't have dependents, especially if they don't have a home, they're not in school or anything like that. There's really nothing for them to write off for the most part. So they tend to be taxed at the highest rate. Whereas business owners, they tend to have a lot of tax advantages and tax benefits. So the author was pretty much saying that if you are only going to be an employee, your wealth is going to be disrupted because you're going to lose so much of your wealth in taxes. So he really encourages people to either be a business owner or be an investor because that's when you can start to kind of protect your wealth. The next thing that he considers to be a wealth disruptor is the stock market. And I kind of told you guys already, just due to the fact that there's so much volatility. You know, the stocks can be up one day, they can be completely down the next. So it's like, yes, you put your $10,000 or whatever in the stock market, but you might lose a good amount of it. Yes, you might gain it, but it's so volatile that you have to constantly be paying attention to it. So To him, he was just saying it's not what he would do. Again, the fees and the taxes that come with that as well. And then thirdly, he was saying government qualified plans. So like 401ks. I guess just kind of got a little bit frustrated at like the returns that he was seeing when he had his 401k. So he actually took all of his money out of his 401k and started putting it into these more alternative strategies. And he was saying his return is anywhere from like 20 to 30%, whereas in the stock market, the average return is 10%. Do your own research, but this is just what he was saying in his book. The next thing that he talks about in his book, apart from just mindset, is really understanding why you want to get rich. Because I'll be honest, increasing your financial IQ, it's work. Like, it's a lot of work to read hundreds of books in a year. It's a lot of work to listen to these types of podcasts. It's a lot of work to organize your money and start looking at your budget and start investing and researching stocks, researching alternative strategies, like all these different things. So, understanding your why is really what's going to fuel you when you really don't feel like doing it. So, he was saying there's four freedoms essentially, and that you have to look at money as oxygen. Oxygen is something that we need to live, but it's not what we live for. And that's pretty much the same as money. Everybody needs money, but we have to understand what we're doing all of this for. So the first one is freedom of purpose. So pretty much being able to do whatever you want without worry. The next one is freedom of money, to do what you want without being driven by a paycheck. And I feel like most people are kind of in that place where you only work the job that you have now because of the paycheck. Freedom of time is to spend your professional and personal time doing what fascinates you and not being stuck in a job that makes you unhappy. And freedom of relationship is to work with people that you actually like so you aren't miserable. So he was saying that, when you are free, when you are financially free, you pretty much empower yourself to have not only control of just your money, but also control over your livelihood. So, if you ever have a boss where it's like, oh my gosh, I can't stand my boss or I can't stand my coworkers, he was saying the ability to be free enough to know, like, I have money in the bank, I have passive income, so I can work with people that I actually like. I can work on projects that actually fuel my passions. And in turn, you'll ultimately be more fulfilled. Now, this part in the book is, in my opinion, where it kind of starts to get good because after he gets past talking about just like growing your mindset and expanding your ideas, understanding your why, all these things, he then starts to talk about infinite banking, where that pretty much means that you would use a dividend paying whole life policy. And from that, you kind of become your own bank. So in the book, he talks about how he had this really successful business, but at some point in time, he needed to go to a bank and get money. And there was a lot of issues with that because he had a super high like tax bill and all these things. So he was saying he had to figure out a way to have liquid capital, pretty much, where if he needed to do a deal pretty quickly, he could do that. So he talks about becoming your own bank where you can have like $1 million insurance policy that pays you a dividend that you're able to take loans from and kind of utilize. And I feel like I have seen that before. I've seen a lot of celebrities talk about it, like Candy Burris. She's talked about that a lot before. I will say that's something that I do need to research a little bit more, just because I know people are using these strategies, but he was saying that the standard like financial advisor is probably not going to tell you how to do these things because they are alternative ways of investing. It's not the typical insurance policy that you would get through your job. So I'm just putting it out here so that way you guys can look into it. Again, it's pretty much a dividend paying whole life policy where again you can borrow against it. But one thing that was interesting about that, he does say that since it's an insurance policy, it does typically grow tax-free. And then you are able to transfer that money to your heirs tax-free outside of like probate court. And then later in life, once you've kind of built up the policy enough, you yourself can withdraw certain amounts from it to help you live as well. So again, I'm going to be researching that a lot more. I would definitely recommend that you do as well. But I felt like that was definitely a practical tip. Again, I feel like a lot of these finance books don't really offer practical information that you can take and learn more about. So I did feel like that was good. And then actually getting into the alternative investing. So for him, he was saying that he does have his own company now, but through them, you can kind of invest in like multifamily real estate. So again, like the $1 million apartment complexes. They also invest in oil and gas, self-storage, car washes, Bitcoin mining, hotels, agriculture, and then I'm guessing they do have like other things, but these are going to be the top investing strategies that they have. Now, I liked this book because I felt like he was honest. He was like, again, this is not going to be for the regular Joe Schmo off the street. You do have to be an accredited investor in order to do this. So that means that you either have to have $1 million worth of assets outside of your home, or you have to have or show income of 200,000 or more for the past 2 years if you're single, and then if you're a couple, it'll be 300,000. But I was like, okay, that's good because at least you're being honest with us. You're being upfront. He was saying you need to work towards putting yourself in that type of position because these types of deals, in order to see a return, he was saying you do have to have at least $50,000 to $100,000 to invest. Again, that's where the life insurance policies come into play. So I feel like he was honest, which I really appreciate because he's showing you what's possible, but he's also telling you what you need to do, where you need to get in order to be able to qualify for this type of deal. But I felt like as far as for a book goes, I mean, there's only like 100 and maybe 60 some odd pages in here, 158 pages. So I felt like he put a lot of information just in a really short book. I actually read this book yesterday because I had it rented probably already 2 weeks and I need to return it because it's about late at this point. But I sat down for like a few hours just so I could get through it and take some notes. I do think you can actually get this book for free on his website. So I would say again, it's worth the read just because I think there's a lot of value in knowing what is possible. It doesn't mean that what he's doing is going to work for you, or it doesn't mean that what he's doing is going to work for you right now in this moment, but knowing what's possible, knowing what's out there, I feel like is super beneficial to us because if that is something that you do want to get more involved in, like I know here, they're popping up car washes like on every corner, right? And people are literally in lines down the block just to wash their car because of how much snow that we get. So I would say, again, if you're not in that place now, at least you know what you need to do to get there. Like you at least have an idea. And then you also know what's possible. So, as always, what is one boring thing that you can do today to start fueling your rich life? Again, I'm your host, Joy Hicks. Thank you for watching and be sure to subscribe.